Moneymakers, welcome back to another episode of Taking Stock Live. I'm your host, Kalila Reynolds, and it's my pleasure to be here with you yet another week. So, markets go in cycles. I see that's what, who's saying that? Limitless podcast. Big up yourself, Limitless. There's a lot going on. We're at the mid-year point already. May is pretty much done. June is about to start. Well, almost at the mid-year point. 5 years, 5 months out of the year already down. Another 7 months or so to go. So we want to find out, we want to check in with the JSE or check in with, our analyst team and see what are the updates, what are the things that they are looking out for right here at the midpoint cycle, the mid-year cycle. And then later on in the show, we're also going to be talking about Massy and some developments there. But first, hit that like button. Let me know that you're watching. Subscribe to the channel. Share the video with a friend. Let them know that Taking Stock is live and popping right now. Subscribe to the newsletter at getmoneynews.com. And of course, let me know in the comments, in the chat, where you're joining us from, what part of Jamaica or what part of the world. And now, come on, let's get this money. On this episode of Taking Stock, we're almost halfway through the year. How has the Jamaica Stock Exchange been performing? And what can we expect for the rest of the year? Plus, there's been a lot of changes at Massy over the past few months. What should investors expect? Our analysts will discuss.
But first, here's What's Hot, brought to you by JMMB Group, your best interest at heart.
Barita Investments is urging investors to grab a stake in its bond offer before it closes. The company said that due to strong market demand, they've decided to fully upsize the offer. That means an additional $6 million and 1.2 billion Jamaican dollars of bonds are available for purchase. There are two US dollar tranches. Tranche 1 matures in 2 years and has a 7% interest rate. Tranche 2 matures in 3 years and has an interest rate of 7.5%. The remaining tranches are in Jamaican dollars with maturities ranging from 2 to 10 years. The interest rates range from 9.7% to 10.9%. The offer is scheduled to close on May 26 but could close earlier. Lighting distribution company Fosrich is stepping into the residential real estate arena with its latest project. The company's teamed up with BC Dundee Enterprise to develop a gated community in Hampton's Trelawney. The development will transform roughly 100 acres of land into 600 housing units and a shopping complex. According to Fosrich, they've already received some of the approvals. Work is expected to start by the end of the third quarter this year. St. Thomas residents welcomed KFC to the parish last week at the official opening of the Morant Bay Urban Centre. The government said the $6 billion complex will boost economic activity in the parish, once dubbed the Forgotten Parish. According to Prime Minister Andrew Holness, the government has spent over $32 billion improving access in St. Thomas through road infrastructure and other projects. The United States lost its last perfect credit rating after global ratings agency Moody's lowered its outlook on the country's economy. Moody's dropped the U.S.'s rating from AAA to AA1, expressing concern over the government's ability to pay back its debt. Moody's, which has held a perfect credit rating for the U.S. since 1917, is the last of the 3 top rating agencies to lower its score for the United States. Fitch Ratings downgraded the U.S. in 2023 and S&P Global Ratings in 2011. According to Moody's, successive U.S. administrations have failed to reverse ballooning deficits and interest costs.
What's Hot was brought to you by JMMB Group, your best interest at heart.
12 months. That's all it takes to transform your finances with Money Mission Premium. For the next year, I'll guide you on the process to take your finances to the next level. You'll get my premium courses, monthly mentorship, and a great community of peers to help you on your journey. Go to moneymissionja.com, Let's get this money.
Let's get this money.
Welcome back. And just to let you know as well that we just dropped some new modules in Money Mission under the Investing for Beginners course. We have module 4 is now available, investing strategies. So make sure you get on that. Go to moneymissionja.com to sign up. And as you know, we now have our brand new workbook available on amazon.com. Just search for Money Mission Workbook, or you can search for my name, Kalila Reynolds. Now let me see who we have online, who's joining us from around Jamaica and around the world. We got Kish saying hello to the money makers. Limitless says markets go in cycles. We got Dwight in the house. Tavares joining us all the way from Timbuktu. Humble Boss is checking in from Negril. Tavares is excited to see the J Trader updates. Me too. Claver is checking in from St. Elizabeth. KK Shocker is in St. Catherine. Hillary watching from Kingston proper. JT is in Kingston. Philip, as usual, is in TCI. Philip says, JSE Goodman, they just posted their best quarter in history. Where's the softness? See BOJ drop rates today. Let's go. They dropped rates today? They did? I missed that bit of news. I was preoccupied with some other business today. I need to go check that out. But yeah, good to hear. So y'all breaking the news to me here on Taking Stock, breaking money news. Dwight Jackson said, thank God Bank of Jamaica cut the interest rate again. So me late this time. Okay. Where am I? Where have I been? Tavares says, exciting times ahead. We've got Orlando joining us from Grange Hill. Where are my international viewers at tonight? Normally, I see the people all the way in Spain and China and, of course, in the US and the UK and Canada. Where y'all at? Because I have some news for you, actually. Did you know that you can send money back home to Jamaica effortlessly, reliably, with very little fees, or no fees in some instances, with the Tap Send app? And yes, this is a promo for them. So Tap Send is something that you can access from the US, the UK, and Canada. And they allow you to send that money, like I said, back home reliably, safely, and with very little fees. You can download the app from the App Store in those locations and use my promo code Kalila10. All right, good. Now, let's get into the business of the day because, like we said, we are checking in. We're doing our almost mid-year check-in right now. It's been an interesting year so far. 2025 has been, and we're just barely halfway through. So let's do our mid-year outlook. Joining us for this discussion is CEO of Wealth Watchers, JA, and Taking Stock Analyst, Julian Morrison. Welcome back, my big friend, Julian. Quoted in the Money Workbook on 7 pages.
Thanks for that.
Yeah. Thanks for your video, man. All right, so we're coming up to the midpoint of the year. Tell us how the market has performed so far.
Well, in terms of earnings, most importantly, I think it has been somewhat of a continuation of 2024. There has been some improvements in pockets. Of course, moving further away from the pandemic, more companies would have seen an increase in profit margins in that they can finally start to increase prices and pass on some of the expenses they would have been facing over the last couple of years, having supply chains normalized, having these input costs normalized, and finally they would have the breathing room and pricing power to be able to pass on these prices to customers. So we're seeing a greater improvement in profit margins for more companies across the board. But I have my watch list, which I've been watching closely. Of course, it's no secret. My watch list includes Scotia, Fontana, Trans-Jamaican Highway, and Cygnus Credit Investment. Quickly tell you how they performed in terms of their last set of reports. So net earnings after tax, unfortunately, is down 31.8% year over year for Scotia. Their 3 months 2025 report. It's at 4.2 billion, but this has a lot to do with the asset tax that was implemented for that period. And if we were to add back what was lost to the asset tax, earnings would be at 5.9 billion. Earnings after tax. So it would have been closer to a flat result as opposed to being down 31.8%. Fontana is up next. Pre-tax earnings grew by 11.9% to 570.8 million as at the 9 months results, 2024-2025. That has a lot to do with core revenues growing. Of course, as you know, we spoke about pricing power, being able to pass on more of the price increases to customers as opposed to 2 years prior. So what we're seeing across the board is firms' ability to have greater pricing power across the board. They're not being held hostage by tight supply chains. So I'm very encouraged by Fontana's result.
And they were on your list at the start of the year as well in January, and they're still there. So that says something.
For sure. I feel very encouraged because what's important is not just quantity of earnings, but quality of earnings. So that means that a lot of the earnings are actually backed by free cash flow. So it means that these companies are not just making paper profits, but the profits are actually backed by operating cash flow in the firm. So they have the ability to pay out dividends on a consistent basis. So it's not just about paying one-off dividends that are huge, but it's becoming more and more of a dividend engine based on the business model and, of course, how the company is managing capital. So I have a dividend bias. I like cash generators. Next one is Trans-Jamaican Highway. Net earnings after tax grew 31.1% to US 9.07 million after the 3-month report for 2025, for their 2025 financial year. As you know, Trans-Jamaican Highway, they have the ability to increase the toll based on the contract that they have. Normally, there's a review every July. Apart from that, traffic volumes have been up consistently. And of course, its infrastructure is pretty much unavoidable because it's such a core part of everyday life. And the quality of the asset is fair. It's always maintained. There's maintenance agreements between the counterparties. And because of that, the quality of the asset is maintained. So you don't have it running down like other types of infrastructure that we've been accustomed to, unfortunately, in small island developing states like Jamaica. So I remain a Trans-Jamaican Highway bull because it's a cash generator. Next one, Cygnus Credit Investment saw a huge jump in their earnings after tax, north of 60% year over year. The result was 7 million US for the 9 months period in the 2024-2025. And that has a lot to do with how the company restructured its treatment of Accrescent. So more of Accrescent expenses were rolled up into Cygnus Credit Investments overall. So the cost structure before was such that the expenses weren't as consolidated as they are now. And because of that, more of Accrescent revenues are going straight to the bottom line. And that's why we're seeing that one-off jump. We don't expect to see another 60% increase in the next financial year, but we don't need to. It's just about putting the performance in context because it's more of a restructuring. And of course, natural loan growth, but more of it had to do with the restructuring of expenses and having the revenues hit the bottom line directly. So that's just a brief update on the stocks that are on my watch list. I think they've performed creditably. They've met my expectations. I've explained before I have a bias to cash generators because Jamaica is a fragile economy and it's important to have a strong balance sheet in that if there are any shocks that happen, like a hurricane or any other act of God, we're just coming out of a pandemic. A lot of consumers are relying on credit cards to survive. Anything can happen in terms of sales. You might not get a big increase in terms of sales volume. You need a strong balance sheet to back that. And that is why I like cash generators. Now, In terms of BLJ cutting rates by 25 basis
All
points.
right, hold on. We're going to come to that in just a sec. So just to summarize, you're looking at Scotia, Fontana, Trans-Jamaican Highway, and Cygnus. Cygnus and Fontana were on your list earlier this year.
Yeah.
I
I
can't
think I
remember.
mentioned Scotia before too.
You might have mentioned Scotia before too, but
Yeah,
TJH is new to the list, surprisingly.
Yeah, it
Why
is.
why TJH now compared to January? Because we've been watching that stock.
Yeah, Trans-Jamaican Highway has a lot of advantages. So what's key is the fact that the asset is being maintained. So as I said, there are some ironclad maintenance agreements to maintain the quality of the road. It can't deteriorate past a certain state because of those maintenance agreements. And also it's an infrastructure asset. It's a part of everyday life. It's something that is very hard to replicate and it has a very long lifespan. So this is something that has durability, not just financially, but physically as well. So these type of assets are very hard to disrupt or substitute. And because of that, it has what is called a strong moat, an economic moat. And businesses that have a strong economic moat, they have lower downside risk. So it's pretty much safer to invest in these kind of assets, or I would say they're more advantageous. You have less thinking to do as an investor because pretty much you're doing less guesswork. These businesses don't get easily disrupted. It's not like a company that comes out with a dating app and then another firm comes out with a dating app that's faster and better. And then the next year, another company comes out with another dating app that's faster and better and shinier. Those companies have low moats because they're easier to disrupt. So I like businesses that have very strong moat, they have very strong competitive advantages, and are very hard to disrupt.
Yeah,
So,
I mean, the highway, the infrastructure alone is not
yeah,
easy to replicate. Unfortunate that they still haven't well, depending on what perspective you look at it from as an investor, unfortunate that they still haven't started charging for that last leg of the toll yet.
yeah, that's the
But we
early,
know that eventually it's coming.
That's the early, so you shouldn't complain.
That's what I'm saying. It depends on what perspective you look at it from, because I use a
Yeah,
toll all the time. So
yeah,
there's
yeah,
that.
yeah.
But as
But
an
that's still to
investor,
kick in. That's still to kick in. That's significant. That's a huge point. And again, there's normally a review every year. I believe it's every July. There's a review for an increase in the toll. And again, many of these factors go into the ability to pay dividends. So it's good to have a dividend cushion in a market like Jamaica. Well, overall, but specifically in a market like Jamaica, where we don't have the institutional investors coming in to start heavily right now. So we're able to scrape up additional units using these dividend payments if you choose to reinvest your dividends. So it's a good way to increase your holdings, and it's a good way to position for future upside because if you have greater units, meaning you use your dividends and buy more shares, buy more shares, buy more shares through dividend reinvestment. What it means is that if that stock moves even 10% in the future, it's 10% of a bigger number because they have more shares. So dividend reinvestment is a big part of my investment philosophy. It gives you options. You have the ability to make choices. You can reinvest in something new or something that you hold currently. It's not a case where you always have to crystallize gains and move somewhere else. So that puts more pressure on you as an investor in terms of opportunity cost. But I have a institutional investor background, so there's also that bias as well. I was always talking to the fund managers that had this mindset. So maybe maybe I'm biased by that.
yeah.
Clearly I don't have that
Because
those
you've been
assets under
buying,
management, but
you've been buying the big money for the big money people.
yeah. I mean, every now and again you bet on a dark horse, but that's not my bread and butter. I like to bet on things that I know that can pay handsome returns over and over and over and over and over, and I don't have to do too much homework to think about it. In terms of the sustainability of that. That's the thought process that goes into my selections. So I was just going to round out some of my thoughts about the market for the rest of the year. I think we should see an increase in terms of volumes traded, largely because there's an improvement in earnings outperformance this year so far compared to last year. I don't expect us to go back to where we were maybe in 2020, 2021, or even in 2019 as yet, because again, it's going to take a while for institutional investors to work their way back out of fixed income into equities, local equities, because again, many of these institutional investors, they have pension obligations to make and they have to get the yield where they can get it. So even though it's good that BOJ cut the policy rate by 25 basis points and that will give us a bit more liquidity, it's still early days yet. Investors can be encouraged, but it's not as though we're fully out of the woods. I think that
it's a move in the right direction.
Definitely, especially as it relates to equity sentiment, but we won't really see much more activity until we get to a 400, until we get into the 4% neighborhood, like low 4, like 4.25. That is when the market is really going to start to digest that liquidity now and starting to push the liquidity, not just in the money market and in fixed income, but greater into equities. So yes, it's one more step closer, but we're still not into that sweet spot yet. So investors should continue to look at opportunities that can last, reinvest those dividends, have a long-term outlook, and focus on entities that have significant upside. You might get a tactical bit here and there, get a 10% here, 15% there, but that alone is not going to really move the needle. A lot of the returns have to come when the market cycle changes. Limitless said that market moves in cycles. You have to get ready for the next cycle. You can't just think about right now.
Absolutely. So this conversation, there's been a conversation going on the chat from last week, and I see some people bringing it up again. So Garvin said, and he's not the only one to mention it. Garvin says the JSE as the company posted its results recently and it performed very, very well. However, the market on a whole, as in all companies listed on the exchange in terms of stock prices, has been down year to date. So what does that say to you that the JSE as a company, that they've had their best quarter ever?
Well, what normally happens in a cycle with weak sentiment is that stock prices are not as reactive to earnings outperformance, meaning that if a company does better year over year or quarter over quarter, or even surpasses investor expectations by some other measure, you find that the market itself, in terms of price reaction, is not as great when sentiment is weak. When sentiment is strong, however, a more modest outperformance, slight outperformance, can give you a bigger price reaction. So what is key is to understand where you are in the cycle and gauging your expectations relative to the cycle that we're in. So right now, sentiment is not strong as yet. Sentiment will eventually become stronger when liquidity puts us in that position, meaning that interest rates, the policy rate gets below a certain threshold, and that is when we get to the turning point. So that's a part of it. It's really a matter of sentiment.
So I think what we have to look at as well for the viewers is how the JSE actually makes money as a company, as opposed to the entire market. So the JSE makes money as a company from listing fees. So when you have new IPOs, new listings, they make money off of that. I think that's where they make a lot of their money, but they also make a lot of the smaller money, but it accumulates to a lot from trading fees. And so more trading fees means that more trading is happening in the market. And I haven't looked at their results to see where they're making the bulk of their money, but to me, it suggests that there's a lot more trading happening right now. And so there's a lot of activity returning to the market.
Volumes have definitely improved year over year because 2024 was a terrible year as it relates to volumes traded. Volumes have been creeping back into the market, especially for larger stocks. More of the main market names, the blue chip names again. You know, the allocation in the portfolio for larger investors, institutional investors, they started to branch out a little bit. But again, right now, yield is the name of the game. Trying to get yield on fixed income to pay those pension obligations and other liquidity obligations. Because just like us, pension funds have bills to pay. So you have to generate that yield in order to pay those bills. So when it is that the yield has pretty much reached a stage where it's okay to start to balance that whole focus on yield to a greater focus on gains, then you see institutional investors start to rotate more.
It's been a few weeks now since the market cap for the junior market was raised to 750 million JMD. I was expecting to see the IPO is dropping as soon as the announcement was made, but so far we've had nothing. The only thing we've had is Tropical Battery, and that doesn't even fall under this junior market cap raise. So what's going on, Julian? I thought the IPOs were lined up.
Yes, it comes back to sentiment. Again, it comes back to sentiment. The uptake is not very strong because of what we just discussed. So it's going to take a while because when we see it's everything combined. So the number of transactions coming to market in terms of cap raises, it's also the volumes traded that we have to monitor, which is improving, but at a very modest pace. And also, we have to look at the fact that the market has not reacted that much to earnings outperformance. So when we look at those factors combined, it tells us that sentiment is still weak. So let's take it a step further. VML, that's Victoria Mutual Investments, NCB, Scotia, Sagicor. What stood out to me across those financial institutions is that many of them have seen higher credit impairments year over year. Even Dollar Financial, they've seen higher credit impairments year over year. And for NCB, they mentioned that their retail segment and their small and medium enterprise segment were apart from their investment segment, NCB Capital Markets, in terms of the bank, they have seen the impairments on that side primarily. So what that tells us, or what that signals to me, is that the economy is still very fragile because during the pandemic, many individuals and small businesses had to borrow a lot more than they were initially planning to, just to survive, just to get over the line. Because of the loss of income, we're primarily a service economy. Most SMEs are service providers. So what you find is that many persons and small businesses, even medium-sized firms, they had to borrow a lot more. So what you find is that when we came out of the pandemic and we had the supply chain challenges and cost of living became a major issue, which it still is, but to a lesser extent, what you find is that many firms are now becoming zombie companies or close to becoming zombie companies. And I'm not just talking about companies on the JSE. Remember, most companies are listed. So zombie companies are firms that operate and open their doors and do business, but at the end of the day, they make just enough to pay rent and utilities and salaries and just pay interest. They're just able to pay debt, so they're in a borrowing cycle. So they have to keep on borrowing to survive. So they borrow to pay debt, and then they make a little money, and then they take that money now. All they have left is the balance to pay interest, maybe a little principal, and they're on a hamster wheel pretty much. So there isn't a big enough paradigm shift to get many of these companies out of their borrowing cycle. Again, because one, market sentiment is weak, and of course, it's both the consumer and these businesses facing this situation. Put something else into context. Apart from seeing the higher credit impairment, when you look around us, many of the retail spaces that don't sell food, many of them are empty. They have very short lines. You look at clothing stores, you look at stores that sell jewelry or electronics, many of them are empty. They don't have long lines. A lot of these places are having sales right now. And we're not talking about just online, we're looking at retail stores, brick and mortar. Even some of the traditional firms I don't want to call in names, so I don't want to embarrass them, but just have to be observant when they're going out shopping. A lot of places are having sales right now. And it's not because they're generous, it's because they're fragile. Some of them, if they haven't become zombie companies already, they are at risk of becoming zombie companies.
Wow.
When you look at Sovereign, look at how many stores have closed down in the last 18 months. That's not a coincidence. Some of these
Yeah, I think it has a
companies have
lot to
been
do
there.
with when they raised the customs, the what do you call it? The import duty, not the import duty, the amount that you pay, the de minimis tax. I remember Christmas going out, Christmas Eve going shopping in Halfway Tree, expecting to be fighting for parking, and it was easy breezy, in and out. Nobody was out
Yeah, that's not
shopping.
a
And
good sign.
I spoke to some of the vendors, and they're like, ever since they raised that de minimis tax, nobody's been
Yeah,
shopping locally.
yeah,
Everybody just
yeah,
order online.
yeah. Ordering online is a major aspect of it as well. But overall, I think that, especially when we look at the financial institutions, the fact that the different financial institutions for the same period are seeing a material increase in credit impairments, it says something about where the economy is at. So sometimes when we just look at unemployment or we just look at GDP growth, it might not be telling us the full picture in a vacuum. But when we put all the pieces together, we look at the health of credit portfolios, it tells us a more direct picture of how strong the economy is in terms of what companies and individuals can do. So who knows? Maybe more firms will be coming to the market to refinance in another year and a half, but it's going to take a while for sentiment to come back. What also stood out to me is the fact that we're seeing a lot, well, not a lot, but we're seeing quite a bit of M&A activity. So we're seeing where Seprod is taking a greater stake in AS Bryden, and we're seeing some other transactions. Hold on a second, Khalil. Just give me a second.
All right, we're gonna take a break now anyway. So, and I know I've been having some issues with my camera. Julian's audio is not the best either. But let's take a break and we'll come back with the analyst. But first, let us do our poll question of the week. So our poll question for this evening is, will you be investing in Tropical Batteries APO? And we haven't even discussed this yet. We're actually going to discuss it in the next segment with both Julian and Leo from JMMB. But so far, what have you decided, if you've made your decision yet? Will you be investing in Tropical Batteries APO? A, yes, can't wait. B, no, not interested. C, still thinking about it. Or D, other, leave a comment. Will you be investing in Tropical Batteries APO? That's your poll question for this week. Up next, we've got your market recap, and the analysts are standing by. Time now for your market recap, brought to you by MyMoneyJA.com, the official data partner of Money Media. Get 10% off your subscription with the code MONEYMISSION. The JSE Combined Index was mostly flat last week. 128 stocks traded across the main and junior markets for the week ending Friday, May 18, 2025. 54 made gains, 63 lost value, and 11 stayed the same. 137 million shares changed hands on the Jamaican dollar market, valued at $724 million. TransJam was the week's most traded stock, with 43 million shares changing hands. It started the week at $3.66. Wigton traded the second most shares. The stock's price was unchanged to open Monday at $1.22. And One-on-One rounded out last week's most traded stocks. Now let's see who had the biggest gains of the week. ISP Finance was the JSE's top stock, up 32% to open the week at $11.50. JetCon had the second biggest gain, up 19.5%, and Margaritaville Turks rounded out the top stocks, up 19%. On the losing side now, KLE Group was the week's biggest loser. The stock lost 20% to start the new week at 92 cents. Medical disposables and supplies fell 16%, and Dolphin Cove lost 14% to close out the week at $12.09. Over on the Trinidad and Tobago Stock Exchange, the composite index gained 7 points, or about 1% last week. NCBFG was the TTSE's most traded stock. It opened Monday at $2.19 TT. Scotiabank Trinidad and Tobago was the market's top gainer, up 7% to start the week at $53.73 TT. And on the losing side, One Caribbean Media fell 10% to open Monday at $2.70 TT. Over in the U.S., the Dow Jones was up about 2% last week, while the S&P 500 and Nasdaq gained nearly 3%. It was a rough week for motorists at the pumps last week, as gas and diesel prices were all up $3.06. In foreign exchange trading, it took an average $159.16 Jamaican to purchase $1 US last Friday. That's $1.03 less than the week before. One Canadian dollar cost an average $115.20 Jamaican. One British pound cost $211.70 Jamaican, and you could buy €1 for $179.23 Jamaican on average. Finally, on the crypto markets, Bitcoin prices were mostly flat over the past 5 days, trading at $103,594 on Monday. However, Ethereum dipped 6%, trading at $2,443 on Monday. Market Recap was brought to you by MyMoneyJA, the official data partner of Money Media.
Disclaimer. This is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Like the show? No, I mean, do you really like this show? Well, support us by making a donation on Patreon. Your support will go a long way in allowing us to continue creating content like this and keep taking stock free for everyone. Go to patreon.com/moneymediaja. The link is in the description.
This segment of Taking Stock, The Analyst, is brought to you by JMMB Group, your best interest at heart.
All right, welcome back. Welcome back. I see some of you are responding to the poll question. Let me see some of these early responses. Where we go? Okay, Philip says B, no. Wants them to say APO. Well, we already know how Philip feels about APOs. He's not into it. Ryan says Tropical APO is going to be different. And he says yes to Tropical APO. Sean says D, I would like to, but I'm staying away from the junior market right now. Ryan says A, of course, it's common sense to invest in Tropical Battery APO. Hillary says C, still thinking about it. So we're going to get some perspectives on it shortly. So maybe that helps you to make up your mind. Jason says nope, not into it. Tavares says no to APO. So, and I think that's probably why they didn't actually call it an APO. They called it something else. Secondary market offer, I think is what they called it. But we already know it's the same thing as an APO. So I think that's why they used a different term to avoid people saying exactly what y'all are saying. Some of you are saying no to APO because there is this bias against APOs right now. So let me see who else we have. Okay, it's time to bring back Julian on the program. I know you guys have been complaining about Julian's audio. Julian, I think you're using probably your laptop audio. Usually you use the audio from your headpiece. I think that's what's causing it to sound not as great as it usually sounds. But we also want to introduce Leovani Dillon from JMMB. Welcome back, Leo.
Yeah, man. Good night. Good night, everyone. Good night, Julian, Dalila.
All right. So couple things to talk about. Leo, for you, I want to bring you in first because you've been looking at the Massy. Where is it?
Yeah, man. Just
results.
Yeah.
So tell us what the highlights are.
All right. So Massy came out with earnings recently. Of course, no surprise there because, of course, a lot of earnings coming out around this time. All right, so let me just see if I can share my slide here. Some slides, this could be helpful. All right, so we see this is for Q3 ended March 2025 for them, right? You can see that revenue is up there marginally, not big, 1.7%. On the profit side, though, that's more significant for them. So that's up about 53% to TT, 170 million. That's about what JMD 4 billion. So it's a big increase for them. If you look over the 6M period, revenue is up actually about 8%, and profit before tax is up around 16%. Importantly for them, the cash flow from operations, that is up 80% in the 6 months period. So that's also a big one, and that's going to be important for something I'm going to go into a little later. And also, so one of the key drivers for this was from their gas products portfolio. So that did very well in the 6 month period. So that kind of boosted their numbers for the full year. So now, all right, so let's take a look now at the performance. So the numbers are decent. However, the performance of the stock, not so much. But for some context, main market down about 5%, and then Massy is down about 9% currently. And you can see that blue line there showing when the earnings came out. So even after the earnings come out, which were, I think was fairly good earnings, the stock actually still went down, but that's kind of in line with the overall market. So nothing, too unusual there. So if you zoom out a bit, you can see how Massy has kind of performed since it's been listed. Listed a little while earlier, back in 2022. It's down relatively significant since the highs of when it was listed. So investors don't seem to have been taking care of it. However, this is in a context of a broader weakness in the market. So, Massy is not really immune to that, at least in the near term. And then again, this is just a heat map, different way of looking at the data in terms of seeing how the performance has been each year, each month. Best month for them looking here is 2023 in May. It was about 17%, but they had one positive year back in 2023. But in 2022, 2024, and so far for 2025, as we've seen, the stock hasn't been doing so hot, right? Now, another thing I want to highlight is how the activity in terms of the volumes. So when the stock came out 2022, there's a lot more trading activity, about $12 million roughly each day traded hands. That's waned, and then now it's back up a little bit in 2025 to about almost 8 million Jamaican dollars traded per day, right, on the stock in terms of the value of trades on the stock. Now, the price to earnings ratio. Now, this kind of highlights what's going on here. So earlier when the stock was listed back in 2022, the PE ratio is a bit elevated, around 16 times, right? Now it's come down significantly. You can see it's around 9 times. So I mean, that's a fair decline because it's a combination of higher earnings and of course the stock price coming down. So from a standpoint, it's actually picking up, right? And you can see even it's trading currently.
From a value standpoint, you said? You chipped out a little.
Yeah, man, sorry. From a value standpoint, yes, it's trading a lot better because, again, you've seen the steep fall off from earlier when it was listed in 2022. Somewhere that you could even argue is somewhat justified at being at 16 times. Now at 9 times, it starts to become a better value play, right? Now, one of the key things to bear in mind why PE ratios at least for a company like this is very important, is that if the PE ratio is lower and the company is a good dividend payer, right, then what happens is that the dividend yield is actually higher. So it's not necessarily the case that you can have a company low PE not paying any dividends, but a company like this that pays consistent dividends and that PE comes in, that can be a sign of something positive, right? Now, with Massy, historically, they paid dividends twice a year, around June and then around December. That's changing. There was a recent announcement on the stock exchange where they're changing to quarterly, and you see that now, right? Where they're gonna pay dividends quarterly now, right? And they announced one again recently. So that last one is supposed to come in on June 27th. So it's technically not even paid yet, but they announced it, and that's another thing. Now, I was listening to the conversation you guys are earlier.
What's their dividend yield? Did you say it?
Oh, no, I didn't say it. The dividend yield now is around 4%. That's the dividend yield now, around 4%. Again, technically, it depends on where you buy the stock, but if you buy it around average prices now, you're looking at around 4%, almost 5, like 4.5%.
Okay, not
right?
terrible.
Yeah, it's not terrible, but so here's the thing now. This chart is not going to fully show it, but it gives a glimpse of what can happen. So with this chart here, I plotted 2 things, right? So I plotted the stock's actual performance, as in like over time, right? But actually plotted against it what happens if when the dividends come in, as soon as you get the dividends, you just reinvest the dividends. Kind of in line with the conversation that was being had earlier, right? What happens when you actually do that, right? It's stuck with, so it's down over this period. That's at the beginning of 2024 to now. It's down 14%. But if you had reinvested, you'd be down 9%, right? Because you've reinvested dividends and you kind of boost your return. So it's still down, but you're not down as much, right? Now again, Massy hasn't really performed well, which we've kind of highlighted in terms of the stock. However, the key thing to note is that the fundamentals are improving and the nature of the business is very diversified across the globe. They have operations in Colombia, in Guyana, Trinidad. Matter of fact, 70% of the revenue, about 70% of the revenue on after-tax profits is actually made outside of Trinidad, right? So they have operations in the US, so they have operations all over the place, right? And of course in Jamaica. So they have that diversified base and at the same time, they're making that consistent dividend payment, right? So that's what we're seeing now, right? Now, I want to use Trans Jamaica an example of what can happen, right? Again, different companies, but an example, right? So with Trans Jamaica, it's a longer history going back to 2021, right? And it has a good record of paying dividends. Julian had highlighted it earlier also, like dividend payers. This one, right? If you just bought the stock, you'd have been up 176%, from buying it to now, right? However, if you had reinvested the dividends as you got, right, you would have been up 270%. So that's a 94% difference, right? If you had to get dividends, you reinvest it, right? So that's highlighting the compounding effect. Again, Julian touched on it earlier in terms of you get that money, you invest it, you get a little bit more in the stock and the stock picks up. You're not really seeing it right now with Massy because, again, Massy stock performance hasn't been that great. However, the idea is if the underlying earnings are picking up, the valuation is getting better, right? And they're consistently making that dividend payment, that value can easily build over time.
It's not a company that we talk about a lot. And I remember you mentioning earlier as you started your presentation about their cash flow from operations being strong. I spoke with James McCletchy, who's the CEO of Massy, several months ago. I think it was around November when their results had just come out as well. And he was explaining about the relationship between that and dividend payments, because in that same report, their profits were down. So I was like, well, how can your profits be down, but you're paying more dividends? And he's like, well, that's because dividend payments actually come from cash flow.
Cash flows.
From profits.
Yes. So so that is the point. Because I said stick a pin on that, and you did. That's good. That's great. So you can see.
Time to unstick the pin.
Yes, no, we can unstick the pin. So the thing is, what you'll see, again, that's why I said that was important, because that cash flow is up for them, 80%. And you want to see that continue operating cash flow being strong, that sets them up to pay even more dividends in the future, right? So as it is right now, again, we know how it is. We're not really in a bull market right now, and there's a lot of uncertainty out there. However, the underlying fundamentals and then the way the company is operating in terms of that cash flow payment does set them up well to be added to our portfolio in terms of when structuring a portfolio to take a look at it. I think it's an interesting dynamic that's at play there for Massy.
All right, so let me bring Julian back in. I want to get both of your perspective on the Tropical Battery APO. There's been a lot of chatter about it in our chat tonight. Also, the branding issue. They haven't quite called it an APO, but in reality, that's basically what it is. So, Julian, what are your thoughts on Tropical Battery's APO?
Well, I think a lot of the verbal assault that has been unleashed on APOs is one-sided, because many of the APOs that happened in a time when market sentiment was getting worse and worse and worse. What do I mean? So a lot of the interest in the market began around 2016, 2017, when you had the IPO boom. But that boom period was coming to an end in the second half of 2019. Yes, 2020, 2021 had some upside as well, but in terms of market-wide the declines year over year in volumes were falling. So when you have a company increasing its shares outstanding in an environment where volumes are falling, what you have is demand dropping and supply increasing. So naturally, you're gonna have the price falling off. So it has nothing to do with whether or not it's an APO. It's just a matter of what was happening on a macro level in terms of volumes year over year, market wide. So I feel like that missing context keeps this narrative going. And the truth and in fact, we won't have a balanced argument until a bull market comes back and an APO happens. If we see APOs, one, two, three APOs happening in a bull market, and we continue to see the prices dropping regardless of what's happening market wide, or in a bull market for argument's sake, then we can have a balanced perspective to say, okay, even when volumes trading is going up year over year, we're seeing APOs having negative price return for investors. That is when we can say, boy, APOs really just don't work for this market. But you can't judge a transaction structure in one sec. That doesn't make any sense. I said this on Limitless, and I'm still hearing it. It's very unfortunate. But yeah, I just think what we should really look at is the fact that the capital is being raised and it's being used for a specific reason. Is it being raised to invest in a business? Is it that it's being made to acquire a new firm, to have two companies merge into one? Or is it just a smaller firm going into a bigger firm, two firms of equal size? Is it a case where companies invested in new technology? In this case, Tropical Battery is paying off debt and they're expecting the savings from that debt being extinguished to grow the company much faster. So that should really be more the argument, in my opinion.
Yeah, and that's the thing. I think people should look at the use of funds in a situation like this as well. Like you said, they're using it to pay off debt. What will that accomplish? It's going to make the company more profitable because they no longer have to be paying back this debt every single month or however often they make their debt payments. But Leo, let me hear you on the Tropical Battery APO. What's your perspective?
Yeah, man. All right. So on the Tropical APO, to be honest, I haven't gotten a chance to fully review it in terms of the team, so I can't go in depth. However, just out the face of it, in terms of looking at the company, what they've done and the performance of the stock there, I think the company has done well in terms of the acquisition that they did recently. That's really paying dividends for them, and I think, of course, the use of the debt, the use of the proceeds to pay down debt, that would set them up well going forward into the future. So I think overall, again, I have a little more homework on it in terms of to have a well-informed opinion in terms of what they can do, in terms of, do the math and figure out, all right, if they pay down this debt, what the future holds and then math it out, to have a more informed opinion. But I think on the face of it, though, it is decent. But I'd like to touch on a broader point that Julian had made too, about the whole negative views on APOs. I've also heard it a lot, and I agree with Julian on it in terms of the timing. So, I mean, if you the last time the market really was doing well was back in 2019, right? Most APOs occurred. I think the first APO occurred towards the tail end of 2019, right? And then, of course, all other APOs would have occurred, subsequently, given that was the first one, right? Now, just a quick refresher. If you look at the combined market, it was down 22% in 2020. It was up marginally 2% in 2021, then down again 8%, then down again 8%, and then up marginally 3%, then down 4% year to date, right? Now, if you look on that setup, right, that overall environment that would have happened, really and truly, to be honest, finding most companies didn't perform well by definition in those periods, right? So I don't think APOs would necessarily be immune to that. So I do echo the point that I think it's kind of an unfair negative spin that's being put on the name APOs. It's just because basically all of them really and truly took place in a bull market effectively, most of them, right?
In a bear
So I
market,
think
you mean?
in a bear market, yes, correct, in a bear market. So it creates a negative sentiment towards it. That's kind of unfair. Yeah, so I do echo the point. What you want to do, you really want to take it on a case by case basis and see if there is value. Meaning, is the APO being offered at a price that if I buy in, there is value going forward, right? Once that is the case, I think it can work. It's almost just a case by case thing, just like anything else. Again, just like when the market was doing well now, in a bull market back in the day, almost every IPO did well, almost everyone. No matter if the underlying is a little shaky and the companies, they did well, right? So it's just that kind of happening in reverse. So I think it's an unfair negative spin on it, but I guess it is what it is for now. But I do think though that in the long run, I think investors would probably better be served by just looking at the underlying fundamentals on each deal instead of having just a biased mindset just because of our naming convention.
Right.
So I think that's man.
And I agree with you. I think investors need to take more of a long-term approach when considering APOs, because at this point, we kind of expect the share price to drop when the APO is announced. And it's not just a Jamaican thing. This happens internationally as well. We see that dip in the price, but if you take the long-term time horizon, the funds that are being raised are going to be reinvested in the company somehow, which leads to the growth of the company. And I think that's where you need to focus.
So, I mean, the near-term drop, that could be fine because that's just the dynamics. So, the stock trading at, let's say, 25, in order to make it attractive, let's say 180, the stock's going to drop to 180, or in most cases it should, because if I own the stock, let's say I own, for argument's sake, 1 million units, right? And the stock doesn't drop to 180. I have 1 million units. It's a fairly large APO. I can say, all right, you know what? Let me sell the 1 million units now, let's say 220, and just buy it back everything at 180 in the IPO. No, in the APO. Now, if I have a large amount, so let's say 100 million shares, then that strategy might not work for me. So what would happen is that you'd expect that to happen, where the APO gets announced and the price kind of moves towards that, which would be down, because if you're doing an APO in order to make it attractive, generally you'd have to offer it at a price that's below what's in the market now, because that's where you get the buy-in, right? But what should happen after it closes is that it should at least gently move back up, right? So that's what should happen, of course, in a healthy functioning market and the company is actually performing well. But you do expect that temporary pullback, because it's just like an arbitrage situation. So that you kind of expect to happen. But yeah, beyond that though, it's really up to the company fundamentals that should be the driver once it actually closes and the money's in.
Anything else that you want to add, Julian, before we wrap up?
Oh, I was going to say that my US watch list includes Google, Johnson & Johnson, Coca-Cola, Procter & Gamble, and ExxonMobil.
You know who I want to list? You know who I want to list who there've been rumors of an IPO for the longest? I need Canva to list. I need that Canva IPO. Canva is coming for everybody's next, Julian. Canva is a tool that we at Money Media use daily. And so every year they do their, not investor briefing, they do their launch of their new products. They are coming for everybody's next. They are coming for Google. They're coming for, they already came for Adobe, the whole Adobe suite. You can do most of those things on Canva now, but now they are coming for Google. Google and Microsoft. So they launched Canva. Listen, they're doing word processing. They launched Canva Sheets, and now you can make a spreadsheet, but not just like Excel, but make it pretty. They launched Canva AI. They launched Canva Code. The amount of things they launched at their last thing, I'm like, listen, I just need the Canva IPO to drop because they're coming for everybody's next. I tell you.
Okay. Give me some homework to do.
All right, but all right. So your picks, you said Google, ExxonMobil,
Exxon, Coca-Cola, Procter & Gamble, Johnson & Johnson.
Okay.
Most of them are down from the 52-week high, and most of them are on the move as it relates to the 52-week low. Most of them are up. Well, all of them are up more than 5%, 5.5%, relative to the 52-week low. So Google and Johnson & Johnson and ExxonMobil, they're all undervalued, in my opinion, while Coca-Cola and Procter & Gamble are fairly valued, but those two are more dividend opportunities. That's Procter & Gamble and Coca-Cola. The others, you'll get more upside on the price because of how much they're undervalued relative to their fundamentals. I think the one that has the most momentum, though, is clearly Google. And I think ExxonMobil has a good mix between the dividend and in terms of upside on the price. Those are my picks for the US market as it relates to our watch list specifically. Yeah.
All right. Well, thank you so much, Julian. Thank you, Leo, for your insights this evening.
I think Leo was going to say something else.
Yeah, man. Sorry, I wanted to touch on one more thing.
Go through.
Yeah, man. All right. So I was listening to the conversation about the whole JSE performance. In terms of, from the viewers, in terms of the period, in terms of the quarter. Yes, it was a brilliant quarter. One of the major drivers, of course, is trading across the market. So there's two major drivers to JSE business. One is, of course, trading of stocks. The next thing is that the trustee and registrar business. So what that's about, it has different parts to it, but one of the major parts to it is, for example, when you have a bond that's issued, whether private or, so most investors probably don't hear of it, right? They usually have a registrar or trustee, right, that handles the payments of the interest and all of that. They're huge in that business, and that's a very stable business for them, right? So, of course, the trading activity that fluctuates, that business is very stable. So if you look on it quarter over quarter, year over year, it almost like it steadily just goes up over time, right? So if you look back in their history and you look on their fee income now, trading income used to be the bulk of their thing. Whenever it goes up, that's when them really make a lot of money. Whenever it goes down, not so much. Now, even when it kind of fluctuates, it's not that big of a deal because the bulk of the revenue actually comes from that side of the business. That being said, though, for this quarter in particular, this March quarter, it was a big quarter for them. Even though this goes a little bit outside of the quarter, up until April 2025, right? About $49 billion traded on the market. For perspective, that's about the same volume for all of 2023, right?
Oh, wow.
So it's a big number, right? I'm going to drop a little pro tip here. It's public information technically, right? With the JSE in particular, you can tell beforehand when they're going to have a good quarter because they release what their volumes are in the market. So you can actually go on the stock exchange and see what the volumes are. And you can even tell daily, because remember, when activity takes place on the market like trades, it's public information that, for argument's sake, a $5 billion trade took place today on XYZ stock, right? So every time that happens, you can actually calculate how much money the JSE is going to make. So you can actually know in advance. I'm just going to drop like a pro tip out there for the viewers.
All right. Thanks for the pro tip. Thanks for the pro tip, Leo. And thanks again, Julian, as well. You guys, you can check out Julian at wealthwatchja.com and
in the Money Mission workbook.
And in the Money Mission workbook, of course, and in Investing for Beginners at moneymissionja.com. So he's also there. And Leo over at JMMB. Thank you so much. We'll come back with your comments from the viewers.
This segment of Taking Stock, The Analysts, was brought to you by JMMB Group, your best interest at heart.
Guess what? You don't need to be rich in order to start investing. As a matter of fact, investing is how you get rich. You can start with as little as 1,000 Jamaican dollars at some firms, like this security guard that I met a few months ago. That's how much you started with?
1,000.
1,000.
Yeah. It's a good thing to do it still, to learn more.
And you happy with it so far?
Yes.
Check out my Investing for Beginners course. Go to investingforbeginnersja.com to get started. Let's get this money. And And like I said, new modules just dropped on Monday. We have 2 other modules coming next week, Monday, and the following Monday for the brand new updated Investing for Beginners course at moneymissionja.com. Or you can check it all out in the workbook over on Amazon. Let's take your final comments for the evening. Roswell said she loved the discussion tonight. I saw somebody saying that the chat, here it is, Garvin said the live chat is its own segment tonight. Listen, I like to follow the side conversations that you guys have going on. Very entertaining, but also very educational. So yeah, this is a thing. The live chat is always its own segment. I feel like I can make it its own show sometimes. That's why I always come back at the end and take comments from the live chat. Let me see, who else do we have here? Tavares been commenting a lot. Learn, grow, invest, big up yourself, says that side of the business makes a lot of money, referring to the JSE. Which side of the business? LGI, the listing fees side, the registrar side. That's the word I was looking for. Let's see who else. What else have we been saying? See some starred comments here. Curtis joining us from Waterloo, Canada, and Roderick is in California. Guys, remember you can check out Tap Send to send money from the US, Canada, and the UK to Jamaica. Download the app in the App Store and use the promo code Kalila10 on Tap Send. Garvin says BOJ rate need to drop at least 3 to 4% for the JSE to start getting some love again. Maybe, but according to the JSE's trading volumes, maybe not. The volumes are up substantially, and that's something that we need to continue keeping our eye on. More volumes traded means more confidence in the market, and we may start finally seeing a recovery. Ian is saying good night from Toronto. We've got Jason saying he always wanted to know what are the chances that TJH could take over the North-South Highway. So it's a different concessionaire. I think, is it Czech who has North-South? Because they have to make back their money. So I'm not even sure how that arrangement works. But I think because they built the highway, they have to make back their money. But something that I could look into. I don't think it should be too hard to find out. Tavares said no to APO. Okay, I already took these particular comments. Garvin says he always reinvests his TJH dividends. Some more live comments. Let me see who we have here. Ryan saying My Money JA is a good tool to use to track the performance of the JSE. That is absolutely true, Ryan. Since I started using it, trust me, the richness of the data over on My Money JA, I can't get over the richness. Today I was in a board meeting because I'm on the board of PCJ, Postal Corporation of Jamaica. I'm on their board, and we had a board meeting today reviewing some numbers, and they were asking me about shareholder equity, and I'm like, oh, let me just log into My Money JA and pull up those numbers real quick. So it just makes life so much easier than having to search all over the place for some of the information. So yeah, use the code MONEYMISSION when you're signing up for My Money JA. John, reminding you to like the video. Thank you very much, John, our like police for this evening. Raquel, where you at? Raquel is our usual like police. Who else we got here? Learn, Grow, Invest says volumes are up, but not out of the woods yet. Absolutely not. Definitely not out of the woods just yet. Roswell, correction, I am a sir. I'm sorry. See, I see Rose in the name. It looked like a female name, but my bad. Apologies. I need to make a mental note that Roswell is a sir. Roswell said he loved the discussion tonight. Well, thank you guys for joining us. Thank you guys for joining us yet another week. It is my pleasure serving you and bringing you the latest information on stock market news, what is going on with companies. We're going to be working on quite a few things in the coming week, trying to get you some more info on the Tropical Battery APO. Alex Melville, call me. We need to work out something between now and what date does it open? I think the 27th. It might be the 22nd. I have to check back the dates. But that APO opens within a couple of days, and we need to do some more work on that. So yeah, thanks for joining us yet another week. I hope you guys have a blessed and safe Tuesday evening. For those of you who have kids who are going on break for the next few days, enjoy your time home with the kiddies. And for those of you who are planning Labor Day projects for Friday coming, all the best with your projects. Beautify the nation. I will see you back here next week, Tuesday, for another episode of Taking Stock Live. Remember to tell a friend about this program, because investing is the new sexy, and we want to make it cool to talk about money. So until next week, I'm Kalila Reynolds. Thanks so much to our hardworking production team and to you, our viewers. And of course, let's get this money.